Hello, this is Ed Burke with PlaceForTraders.com for Monday, March 16th. Starting off in the June S&P. In my last video, I talked about the level of 737 being our pivot or guide to the direction of the market. If we could stay above 737, we're looking for a bullish market. If we trade below 737, we're looking for a bearish market. I had the first line of resistance at 762. Now, Friday session, you've seen we had this small trading range similar to the range on Wednesday. The high of the day on Friday in the June S&P was 758 with a low of 739. So Friday's trading range stayed between the pivot level and the first line of resistance. We came within 4 points of the first line of resistance, and the low of the day was 2 points above that pivot level. The market just really looked like there was some indecision on which way they wanted to take the market. Early on, the market was strong. Around the middle of the day, then we went negative. And later on in the day, we had a rally back. The market closed 620 higher at 754.60. For Monday, I'm looking at a pivot level in the June S&P of 750. We need to stay above 750 for a bullish market. If we break below 750, of course, I'm looking at a bearish market. I have the first line of resistance at 763. The second level of resistance at 770. For support on the downside, I'm looking at the first level of support at 743 and then the second level of support at 731. A couple numbers to take note of. The monthly pivot is up at 785. If we could break over 785 in the June S&P, that's actually bullish on the monthly time frame. And also we're still above that second level of resistance on the weekly numbers. That number comes in between the pivot and the first level of support at 747. Some economic numbers that come out Monday morning, 8:30 a.m. Eastern Time. The Empire Manufacturing number, the expectation is down 32. At 9:15 a.m. Eastern Time, you have capacity utilization. The expectation is for 71.1%. And also at 9:15, you have industrial production. The expectation is a drop of 1.2%. Now, something to take note of over this last week with this rally, we've seen Friday we had this small range consolidation. It didn't look like there was any conviction where they wanted to take the market on Friday. We had that small range. Thursday, you had that big breakout day. Wednesday, once again, a consolidation, a small range after this big rally on Tuesday. Tuesday, you had this big rally. And then Monday was a smaller range day. So we've seen consolidation, then a big move, consolidation, big move. If we continue on this pattern, for Monday, you might want to take note of the second line of resistance and second lines of support for the market, because we did have this tight range today. That's all I have for this evening. Thank you for tuning in. If you haven't gone to my website as of yet, it's placefortraders.com. Go on there and get yourself signed up for the free alerts. Thanks a lot and good